Welcome traders to another video on prophecy trades. In today's episode, we will be covering four pairs. We have Euro GBP, NZD CAD, Euro CAD, and a new opportunity that just came about in the New York session, GBP AUD. I will dive in how I got in the trade, what prompted me to enter the trade, and where I'm looking to get out. So if you're interested to know more and learn more about those concepts, stay to the end. So first things first, let's talk about Euro GBP. We are currently in this trade and we are in profit. If you want to know more in detail, in depth on a chart breakdown of this pair, please click the previous video above and I will dive more deeper into that. So as of right now, we had just secured a partial at the minus 27 level. For those who have been watching my previous video, this is typically our first target, and our second primary target will be more of this minus 61.8. So we ended up securing partials here. We took 50% of our trade of our opportunity, and we actually then, previous to that, we had seen market hovering around this area at the New York Open around 7 a.m. and we ended up moving stops to break even, giving us a risk-free trade at this time. So this was about a 4.5, and we moved stops to break even roughly about 7 a.m. I'm just doing a thorough step-by-step what happened. And so then price continued to print, and then price then now within the previous hour had just now hit our take profit one, which is that minus 27. We're securing 50% of our partial. And then now after take profit one has been hit, and considering it's Friday, as we do not want to hold this trade over the weekend, we want to secure as much profit as we can. So what I'm doing is I'm going to trail my stop. If you want to know more, learn more about how to trail a stop properly, please leave a comment. But as far as trailing my stop, I'm looking for market structure that could potentially invalidate the trade. So that's where my stops would be, or potentially looking at some form of dynamic support and resistance. And in this case, I do see a clear indication of dynamic support and resistance. If you want to know and learn more about dynamic support and resistance, leave a comment. So that is the current trade. I will more than likely close this trade in the next couple of hours, depending on how the market plays out. Volatility might start to fall off in the next couple of hours. And depending if I see some type of exhausted candles, I might just secure a 1 to 4 versus that 1 to 4.5. So with that being said, we're moving on to the next opportunity. We had NZD CAD. Again, if you want to learn more about how we got in this trade, please click the previous video. And you can tell this was a close call. We actually had price come all the way down about a pip or two from hitting our stops. And to be honest with everyone, I genuinely thought this was going to hit our stops. But the thing is, we trusted our analysis. We stuck to our guns. We kept our stop loss. We didn't make any adjustments. We stayed with true to our original bias. And price then later eventually ended up targeting our take profit one. And so it notified me, gave me alert at the New York Open, and the price was actually rallying very aggressively within a short amount of time. So by the time I was able to open my MetaTrader, I actually ended up closing somewhere like at 0.808, was it 871? Yeah, because the candle was moving so aggressively. So we took up a partial here and we ended up moving stops to break even. So this trade was roughly shooting for a 1 to 3.5. So we moved it to break even, risk free. We took, what do we do? 50%. And so let me show you what the candle was doing and how I was able to secure that partial. So at that open, there was an aggressive spike. And on the 15-minute, you can see this bullish engulfing candle. This all happened within 15 minutes. And if I even go down to the 5-minute, it happened all within 5 minutes. So by the time it notified me, I was able to actually close somewhere just above this region here. And that's how we were able to secure our profits. And then as far as our trailing stops, it is Friday. I'm looking to secure as much profit as I can to secure my profits that I can count for the week. I'm looking to trail my stop just at this region right here. And depending on how price comes down to respect this trend line will determine if I will be in this trade over the weekend or not. So the reason why I'm holding this trade over the weekend, I am risk-free. and I do have a strong bias that price will continue to rally in this upside and hit this remaining take profit too. So for those that have been watching, EuroCAD is back on the watch list. In the previous video, we were discussing EuroCAD, how we were not going to take an opportunity, but we sat on our hands patiently like a sniper in the grass, and the opportunity presented itself. So what had happened was I ended up putting a buy stop, and I put my buy stop. Let me look. Buy stop was at a 162 600. And people may ask, like, why are you, you've said some round numbers a couple of times now. I like to use psychological numbers, especially when I'm doing some type of limit orders, buy stops, sell stops, sell limit, buy limit orders, and to kind of give me a better confirmation of if price hits this area, price has a strong bias and confluence that it will continue in the direction of my liking. So I actually got executed in this trade. Looks like about, what time was this? About like 10 p.m. I was away from the charts, but I got put in the trade, and the stop loss was just below this swing low. It would typically be outside of the fib trick box, or out of the next Fibonacci zone, but considering there was a dip in price that almost technically invalidated our completed move. On the higher time frame, you can look on the, was it the daily chart? Price only wicked. Price wicked the trend line. Price closed above. So for me, that gave me a strong bias to want to continue to maintain this trend line and look for a potential buying opportunity. So let me jump back down to the hour time frame. So we can see here there was a previous markup. I was looking for some market structure shift, and there was market structure shift technically here. This is where the beginning of the market structure shift became present. So now we are no longer looking for sells anymore, and we're looking for a buying opportunity. We have indecision, we have price action, prices in flirting with our trend line, comes back in, validates, bullish engulfing, and then comes right beneath our, right above our 50 EMA, acting as support. So that is why we're in the trade currently. This trade is roughly what is this trade? This trade is a pretty large trade. This is like a 1 to almost a 1 to 9. Ideally, I'm probably not going to maintain and stay in this trade this entire time. Like I said, I don't like maintaining and holding trades for multiple days. I will probably target this swing high for my initial target. This would be almost a 1 to 5, which is a very healthy risk to reward ratio. Move stops to break even, take a partial, and then let the rest run here depending on where we are. And I might trail my stops from here and see how price plays out, and potentially targeting all the way up here. But the main thing, I want to secure a majority of my partial of my position here and be risk free. So that is that setup there. So we're going to maintain that over the weekend. And then we also have one more trade where we have GBP odd that came to visibility in the New York Open, or just before. It was a London overlap, and it was about 6:15 a.m. was the entry. And as you can tell, there was a opportunity. If you look out to the 1 hour, there's a trend line here. There's multiple taps. There's a tap here, here, and here. And basically, we have essentially a counter trend line. This is a counter trend line, but I'm using it as a dynamic version of a support or resistance in this case. And once it was support, it can be deemed as a resistance. So basically, this is a break and retest methodology. And let me pull out my fibs. So I pulled my fibs here once I saw this, and I did it from this swing high to this swing low, and brought us to that 38.2, which is a More on the stronger continuation Fibonacci rejection zone, so I did like that. I also did pulled out my fib tricks, and I did it from this swing low to this swing high, and you can tell the minus 27 and the minus 61 points here, and there's that blue box. And then before that, I actually zoomed in here, and it's kind of messy, but I'm going to delete it so you can see it. I had two more confirmations. I found an order block from this tip of this wick here, and so that was my order block. And then I also saw a fair value gap where some imbalance and efficiency. And let's do fair value gap, and then let me re-put my fib trick back on. I just deleted that by mistake. And so the fib trick is right here. So all in this zone, we have a fib trick, an order block, a fair value gap. We have a counter trend line that's being respected. That was support now being a resistance. So that's a break and retest. And then the fifth thing was market structure. And let me show you how I saw that. So I went up to the hour time or the 4-hour time frame, and we can tell that price is in a optimal downtrend. There was a shift in structure on this 4-hour time frame. Basically, there's a market structure shift here. Price was printing these higher highs and higher lows. Price came down, respected that area, making a high, not a higher high, collapsed, shift in structure. Our first lower high, our first lower low, lower high, lower low, lower high, lower low, and this was our lower high entry zone. And then I ended up going down to the 15-minute, and I also did see a variation of inducement. And so basically this is like the equal highs. Basically price, there's going to be some type of manipulation. There's going to be some type of stop hunt. A lot of retail traders may have gotten here immediately thinking that they were good to go, and they put their stops just above this area, and then the market movers took them out of the trade and then drove price down. So there was multiple confirmations for a strong sell-off signal. Then I also looked at my candlestick analysis. I did see a bearish engulfing candle here. I did see some indecision candles printing, and then we saw another bearish and then bearish engulfing, and we entered just at that 615 candle here. So right now, we're currently in this trade. Our stops are just above that previous swing high on the hour chart. Like I said, the stop loss can be just outside the fib trick box or just outside the Fibonacci retracement zone. And for me, based on this, I wanted a little bit of a tighter stop loss. If I would have put it above the 50, would have been just above 30 pips. I did not want to do that. And this is now at a 1 to 6.88, almost a 1 to 7 risk reward. Using our fibs, targeting the first target at that minus 27, and the second target would be that minus 61.8. So those are their end of the week updates. If you're liking these videos and they're helpful, press the like button and subscribe. Thank you.